5,
Hi
4,
there.
1. Go
Hi
ahead.
there. Hi there. I'm Areeba Rehman, entrepreneur myself and president of Citizen Entrepreneur for France C20YA. I'm really happy today to have a beautiful panel and moderating it, which is Unlocking VCs. So I would like to welcome Ahmad Al Shammari, partner at STV Fund, Toney, founding managing partner at Plexo Capital, Grégoire Sentilles, founder and CEO of Nextstage, Aneel Ranadive, partner at Soma Capital. So I would like to invite each of you, please, to introduce yourself. Ahmad, would you like introducing yourself?
Absolutely. Thank you, Areeba. And thank you, G20YA, for the invite. I'm Ahmad Al Shammari. I'm a partner at STV. STV is a $500 million venture capital fund. We invest in technology, but for all intents and purposes, we're sectors, geography, and stage agnostic.
Thank you very much. Lo.
Thanks for having me. Toney, I'm the founding managing partner of Plexo Capital. We are an institutional investor allocating capital globally across the startup ecosystem. We invest both as a limited partner, investing into other venture funds, as well as investing directly into startups that we source from the portfolios of the venture funds that we've made a commitment to. We spun out of Google Ventures, or GV as it's now called, where I was a partner in March of 2018. Thanks for having us.
Thank you very much. Grégoire.
Hi, I have been a serial entrepreneur, and back in 2002, I founded Nextstage, which is one of the pioneer and the leader in the growth equity market based in Paris. We invest in France and all over Europe. We have a total of 5.5 billion euros under management, and we focus on fast, innovative, medium-sized companies that we can back from 5 to 50 million euros and being patient investors long-term with evergreen structure. That's what we do for our living.
Thank you very much, Grégoire. And now Aneel.
Aneel Ranadive, grew up and based in San Francisco Bay Area. Went to school on the East Coast, did investment banking for a year, worked on startups for 10 years, built an anonymous social network, video analytics company, daily deal site, local recommendation engine, location sharing apps. After 10 years of iterating on different product ideas, started investing with Soma Capital about 6 years ago. My vision was to invest in software to automate the world across any sector or geography. And I've had a kind of close focus on Y Combinator, which is an accelerator, and over 160 billion worth of startups have come out of the ecosystem, Airbnb, Dropbox, Stripe, Reddit, among others. And I've kind of been close to the ecosystem for 15 years since I started, and have some kind of superpowers from family connections. My father is an immigrant from India to the US and built a multi-billion-dollar software company. So it kind of gives us top exec CEO relationships with a lot of large enterprises to help our portfolio companies with customer acquisition. And then also family ownership of Sacramento Kings NBA team, which gives a kind of unique media, sports, entertainment network as well. We're mostly focused on software across both consumer and enterprise.
Thank you very much. Wow, we have a wonderful panel here. So thank you very much. We're very lucky to having you actually. As you may know, more than thousands of people all over the world are listening to us, and most of them are entrepreneurs. So you can imagine how hot topic it is regarding the VC. So I will start giving some digits because I think it's very important to know that $450 billion are held by funds in North America, with the growth multiplied by 2. 100 billion by Asia, They have a growth of multiplied by 5, and $32 billion by Europe, growth multiplied by 4. Now, the COVID pandemic has decreased of 30% on average the valuation of companies. And in your portfolio companies, are they positively affected, unaffected, or negatively affected by the pandemic? So who wants to start? Whoever, maybe Aneel, if you want to share with us.
Absolutely happy to. So we've always kind of focused on software to automate the economy and to automate different aspects of a company within a company. And it's getting kind of cliche at this point, but we see ourselves as projected years into the future, given what's happened with the world crisis, where there's new work from home behaviors, and the economy and then companies within companies have never needed more automation than now. And so we've seen tailwinds for many of our portfolio companies, from a company like Deal that automates payroll for remote teams, or a Rippling that is a software for HR, or Ironclad, which is a software to digitize contract signing documentation for teams, similar to a DocuSign, or software for retirement plans like a Human Interest. And then we're also investing in software and logistics, software in agriculture, direct-to-consumer models like Misfits Market, which is connecting the consumer with discounted ugly fruits and vegetables. It has been doing phenomenal. We were also seed in a company called Alto Pharmacy, which is a digital pharmacy, which is also seeing tailwinds given the current environment. And we've done some things in life sciences as well, and used kind of family connections and legislation, given my father's software-powered government services, have some government connections, helped one of our portfolio companies called Curative partner with states. They've done over 5 million COVID tests. They were initially doing sepsis testing in early March and kind of pivoted the model. So I'd say for the most part, we've seen our many breakout companies automating different aspects of the economy and within companies, workflow automation, developer tools that make it easier for developers easier, more efficient, faster to write code. For example, a SOC 2 compliance company that we did called Secure Frame that's doing phenomenal as well. So I'd say overall we've seen tailwinds in our portfolio from the current climate.
Yeah, I can imagine. So you want to share your experience, Ahmed, because you're specifically in MENA. That would be really interesting to have your impact on portfolios.
Yeah, and by and large, we've had the same experience, right? So from the get-go, one of our core beliefs that digitization is happening. Software is eating the world, as Martin Luther says, right? And COVID just proved that digitization is a necessity, not a luxury. Overnight, you're either digitized or not. No, man, it wasn't a question, right? So we've seen it across our portfolios, and in areas which might be obvious in hindsight, right? So one of our portfolio companies is Noon Academy. They do social learning. They doubled their user base over that period. Another company is called Ana. They do grocery delivery. During the lockdowns, the market penetration went essentially from 0.5% to essentially 100%, right? And they had to 5x their capacity to try and keep up with the demand, and they weren't able to. Another company, Mersul, waived its commissions. They do essentially a concierge service where they deliver anything from anywhere. So they waived some of their commissions in order to enable people to continue their daily needs. So for the most part, given that we're software investor, invest in market, invest in B2B SaaS, we've seen positive tailwinds to our portfolio.
Okay, that's great. And what about you, Grégoire?
Our metric of analysis is that present we are going through a massive and disruptive industrial revolution, and there are not only one disruption about digital, but three. There's another one about around environmental innovation. Look at Elon Musk. And there's another one around what I call smart health. And we were lucky to see that. We think that if we step back and look at our different portfolio companies, all the ones which are taking advantage of digital disruption, environmental innovation, and smart health are benefiting from the tailwinds that we were talking about just before. I'll name some of them, not the 65 of them, but just some of them. Easy up in artificial intelligence around natural language, which has been picked by Oracle, and which is becoming the source of energy for that. I will talk about Innova Software, who was able to gather on virtually 3,300 pharmaceutical companies around the vaccine for the COVID-19 all over the world. I will talk about Udrive, who is in Europe, the leading solution about digital security for sensitive data, which is a big topic in Europe for obvious reason. I think that those companies are clearly benefiting from one major trend that may be summarized by one number, one figure, which is until February of 2020, e-commerce was representing 16% of the GDP. After June, e-commerce is representing now 33%. We think that in 4 months, it achieved more than what had been achieved in 20 years. And this is the crisis of the COVID-19 is a catalyst of the emergence, the brutal emergence of the new drivers and the new leaders. That's what we see at Nextstage.
Thank you very much. Lo, do you want
Sure, I'll take maybe a little bit of a different approach. I'll give some insight into how we actually manage the unfortunate crisis. So once it became apparent that COVID was going to potentially have an impact on both society and our economy, we did a quick triage of our portfolio companies to make sure that they had enough runway, number one, to be able to get through where we thought we were going to see the ability to have some clarity around what the market was going to do to react to COVID, as well as get an understanding of what the potential impact could be on both revenues and demand for our companies. So we categorize those both for runway in red, yellow, green, and then also revenue impact in red, yellow, green. And, you know, the good news is that our companies had enough runway from a cash basis to be able to get to a good point. And then just like a lot of the other panelists have mentioned, we actually ended up seeing a lot of tailwinds to many of our companies. I'll give a few examples. So one of our companies is Virtual Kitchen, which is a ghost kitchen that provides the ability for services like Uber Eats and DoorDash to be able to, you know, have well-positioned in a hub and spoke model access for their customers to the most popular food in a particular geographic region. And we've just seen nothing but an increase in demand overall. That sector was already accelerating from demand, and all COVID has done is just to further increase the tailwinds. So, you know, I think that speaks to something in general, which is a trend that we're seeing. I think there's two ways I think about this market and where opportunities exist for companies. There were already those companies that were seeing a significant increase in demand. And I would put definitely food delivery as one of those, whether it's prepared food delivered by the likes of Uber Eats, or whether it's groceries for the likes of Instacart. So we were already seeing good demand there, and all COVID has done is just kind of further accelerate that demand. And then I would say there were some existing services. Obviously, you know, companies like Zoom which, pleased to say, Zoom was seed financed by one of the Plexo Capital portfolio GPs, Maven Ventures. And obviously, given that we're in an environment where we have minimal contact with everyone, conference services like Zoom have become an essential part of the ability for us to be able to do diligence as investors or participate in conferences like we're doing today. So we've seen an increase there. We've seen an increase in other things related to screens like Netflix. Netflix has seen their subscriber base really grow and usage increase. So, I think all of those things are to be expected given that people are spending more time at home. And then I think there's another category that we have yet to really fully realize and understand where the potential exists, which is there are many behaviors that we believe are going to persist after we come across the finish line and are able to get the pandemic under control. I think there's a lot of things that we've begun to do that are these behaviors that are becoming the new normals, and they're going to drive another wave of innovation. And I don't know that we've actually seen the results of that yet, but I think there's a lot of smart entrepreneurs that are probably listening to us right now, thinking of a lot of great ideas and will be the next great companies of the future.
Thank you very much. So we all agree that all the trends are changing, the trends of investments, the trends of startups and businesses. So do you believe, Ahmed, that they are different according to geographical zone?
The nature of the opportunities are different, right? So one core of our investment thesis is that in MENA there is a mismatch between supply and demand when it comes to digital, right? And to give some numbers and example, Saudi Arabia's fair share of e-commerce spend is 2 times its fair share. Social media usage, right? So it's between 8 to 10 times its number of users fair share between Twitter, YouTube, and Snapchat. So that's on the demand side. But if you look at the supply side, you find that KSA captures around 15% of its fair share of e-commerce revenue, and around 60% of digital advertising revenue. So we believe that there are opportunities here to capture the local demand, right? So that's on one side. The other side is you see the growth in the ecosystem. And one very interesting figure that venture funding in Saudi in the first half of 2022 actually grew. So a record of 102% year-over-year growth in the same period. So despite COVID, despite lockdowns, venture funding still grew, which speaks to the tremendous opportunity available in the market.
Yeah. Thank you very much. Do you want to add something regarding European zone, Grégoire?
Yeah, I think that in Europe, on one side, where YA for the last 10 years.
Oh. Okay, I think he's having some connection problem. So. Okay, maybe we lost him. Are you with us? We can't hear you properly. Okay.
Where you can see that there are great opportunities to be leveraged. There are some around.
Actually, we couldn't hear what you said. Unfortunately, I think you are having a bad connection. I'm sorry about that.
and I see you.
Okay. So, okay, thank you very much, Grégoire. I have a question, being myself
I have a
entrepreneur.
good,
A lot of
I
entrepreneurs
can
have questions.
hear
Have questions
you
regarding.
and I can see you.
Okay. Thank you, Grégoire. I don't know if I'm the only one who can't hear him properly, or everyone out there, but I'm sorry about that. I have a question because being myself entrepreneur, a lot of entrepreneurs are always wondering why all VCs want to invest in Silicon Valley's startup. However, in other countries, the rest of the world, entrepreneurs are non-stop running after VC. Do you want to answer to this question, Aneel?
Yeah, sure. So I think, myself growing up fully immersed in Silicon Valley, having watching my father build Tibco, this incredible enterprise software company. And he was also involved at the early stages, mentoring, advising the likes of Google, Yahoo, Salesforce, eBay, Steve Jobs, and Steve was building Next operating system. And then my own full immersion in my YC ecosystem, set of friends there that built the Dropbox, Reddit, Scribd, Twitch, Cruises of the world. You have many proof points, and you have kind of mafias of people. There's the famous PayPal mafia that went on to build YouTube and Yelp and Elon Musk companies, and Reid Hoffman with LinkedIn. You have YC mafias where a couple people, a good friend of mine, Justin Kahn, was wearing a camera in his head, live streaming his life with his friends from Yale. They ended up pivoting the company into social cam, Twitch, which was live streaming videos, sold to Amazon for $1 billion, Cruise, self-driving car company. And so I think the more examples you have, the more you have kind of a magnet for talent, for advisors, for big customers to want to take a shot on a small startup, for great people to all want to flock and come and get involved. And we've seen this play out with our own portfolio. We were one of the first investors in a company called Rappi that's also seen tailwinds in the current markets, like an Instacart for Latin America, grocery delivery. They're now moving into all types of delivery services. And they started in Bogota, Colombia, and they scaled to Mexico City and Sao Paulo and all major cities in Latin America. And it's one of the fastest growing technology companies in Latam now. And they've created their own mafia of founders that have been at Rappi that have left to do other things. One is called Frubana, that's a direct-to-consumer grocery delivery product. Another couple people that led growth at Rappi left to start a company called Laika, that's a pet delivery service similar to a Chewy of Latin America. And when I invested in Rappi 5.5 years ago, I was kind of just getting started learning how to invest and be a good investor. And many of my kind of brilliant tier one legendary name VC friends, they said, hey, don't touch Latin America, where there's just too much political instability. We don't really understand the lay of the land there. And at the Y Combinator demo day, I had invested before the demo day. People literally would just go down the list and cross off all the non-US companies and to even look. So I think I hear some echoes. To answer your question, I think we just need more examples, kind of great teams paving the way, showing that it's possible to get to scale. And as the more that happens, the more you have a kind of black hole for new venture dollars coming in. Passionate, fearless entrepreneurs seeing that it's possible. When Roger Bannister broke the 4-minute mile mark, then all of a sudden you have like high school kids breaking the mark. And so you just need that first person, I think, or the first couple founders to really break through and show that it's possible to scale and raise enough capital to get to scale, attract enough talent for others to go follow suit.
Thank you very much. Lou, would you like to add something to this question?
Yeah, I think that was very well said by Aneel, and we're fortunate as well that Rappi is actually one of our indirect portfolio companies from one of our GPs out of Mexico. So I think what I will add is that there's this thought within the ecosystem that Silicon Valley is the be all end all. And without question, Silicon Valley in the Bay Area is where all of this started, is where all the magic began. But one of the more interesting things, I think, just to touch on Aneel's point, is that Silicon Valley doesn't have a monopoly on all the best ideas. You know, great ideas can originate anywhere. We have historically seen that because of the close interconnectivity of Silicon Valley, that ideas are able to scale quicker because one has access to the ability to get capital that's needed, the ability to identify the right employees to build the product, the ability to have customers. One of the other great things about all of the larger companies in Silicon Valley is they're very, they're willing to take a risk and buy products from startups, right? And so that's really interesting and a way for companies to be able to start to scale quickly. And then obviously the density of the capital finances all those activities. But that said, within the United States, we've seen the development of other ecosystems, New York, Seattle, Los Angeles, Austin, and I think even looking globally, we're now in a global environment and innovation doesn't know any boundaries. Innovation doesn't know where country lines exist. Innovation doesn't know what the stock market is doing. So innovation is just going to happen. And again, kind of going back to what we're seeing right now with the pandemic, I think there's an increased level of comfort and I think actually a greater accessibility by entrepreneurs to those that have capital, because everyone now is in front of their screen. We don't have to waste time traveling to go see a company. We don't have to get on a plane to go see a company. Everyone's kind of become accustomed to this new normal of being able to interact and get to know each other over video. And I think another thing that will happen is, historically, there's been a company that might not have been based in Silicon Valley, but investors will pressure the entrepreneurs to move to the Bay Area. We'll invest in your company, but only if you move to the Bay Area. And I think what's happened during the pandemic is that not only are companies realizing that by having a remote staff, that staff can actually be very productive, right? I think that is also happening with investors. Investors are realizing that, wow, I guess we don't actually need to have those companies move to the Bay Area. Wow, I guess we could actually invest in a company that has a distributed workforce. So I think these are all positive tailwinds for entrepreneurs around the globe. And again, back to the audience that's listening now, I would absolutely recommend that people try to identify those investors that are now more open to truly investing on a global basis as opposed to just investing into their own backyards.
Yeah, that's so true, because we don't have any barrier right now thanks to this digitalization. You're so right, actually. Thank you very much. I have a question for you, Ahmad, because we all know that all the entrepreneurs now, they want to have a different kind of impact on the world, different kind of engagement and responsibility when they build a business. So for you, is that a trend that all the VC funds are following? And according to you, what are the 3 most attractive sectors for investments in present circumstances?
Absolutely. Given COVID, it has become more visible, right? So one example I mentioned is Noon Academy. So Noon Academy is a company started out of Saudi Arabia. They're now present in markets across MENA. They're in Egypt, but they're also in India and Pakistan. And their goal is to increase access to education, and not only that, make education fun. Today, they're competing with Fortnite. This is what they're trying to do. And with a North Star metric of educating 50 million students. And so this is an example of a company that is very impact driven, that was only accelerated by COVID. Health tech is another area, right? So all of us a lot of us like wear wearables, fitness trackers or Apple Watches or whatever, right? And these devices have sensors, blood oxygen sensors, temperature, heart rate. What's stopping us from using these to detect COVID, right? Yesterday I was reading an article on MIT researchers who are able to up to a 95% accuracy to diagnose COVID through a recording of a cough. So health tech is another sector. But also maybe taking it a step higher, it also showed that infrastructure is super critical. Internet is not a luxury. Not only that, internet enables you to go do video conferencing, share large files. The internet became the way you work, the way you connect to your family, and the way you get your daily essentials. So infrastructure, be it internet, be it the transition from bits to atoms, logistics, all of those have become increasingly important, and it's impact driven for the most part.
Thank you very much. So now I have a question for all of you, of course, but I would like to start with Aneel, because you specify on your website and you give a focus on Black founders and female founders. And because I know that in Europe, for example, there are only 9% of women founders. I suppose it's not far better in the United States. What do you do to make it better?
Yeah, so I think, I guess, I wish I had the answer to that. I think, it's a great, I think the starting point is what you're doing right now, which is asking the question. And then, we should all be asking the question. I come from, I guess my dad's Indian, come from an immigrant, Indian father background, mother's American. And many of the greatest American stories all were are kind of like immigrant, self-made American dream stories and come from all types of backgrounds. And so I wish I could take some credit for focusing on trying to back more female and minority founders. But I've kind of just followed the lead of my friends at Y Combinator, led by Michael Seibel at the helm, and they've kind of called it out and tried to make it a focus. I believe in, and I think I might have gleaned this from a podcast that Lo was on a while back, speaking of basically just looking for opportunity first and foremost, and that by kind of not following the herd mentality and by looking at diverse outlier backgrounds and stories, that's where mountains can be moved. And so, we want to create the highest returns possible for our investors. And I've kind of fast followed my good friend Seibel leading YC with kind of what they're doing in trying to think outside the box and look at outlier stories, cultures, backgrounds across any sector or geography. And so, we've called it out on our website, similar to what YC has done, and it's yielded incredible results. Some of our fastest growing teams are female or minority led, for example, and getting some tailwinds in the current market, like a Flutterwave, which is a Stripe for Africa, is doing phenomenal. Among many others in our over 200 portfolio companies. And so, I think for us, we want to generate the highest returns possible for our LPs. And we think backing diverse teams across any sector, culture, or geography is what's going to hopefully longer term set a strong example and ultimately ideally level the playing field more one day.
Thank you very much, Aneel. Grégoire, do you want to tell us how you accompany them? Grégoire, are you with us?
Can you hear me?
Yes, that's perfect.
The answer is, one, we try to surround them with an entrepreneurial ecosystem, as Lou and Aneel were mentioning that, what they do in the Silicon Valley. And we do that because the more intensive and the more fertile is the ecosystem environment, the more, the easier they grow and the faster they grow. Two, we try to foster and to focus on three things. One is how can we accelerate the innovation trend and to industrialize the way they integrate innovation at the core of their business. There are a lot of good benchmark that we were able to bring back from the US where I used to live. Two, we try to have them to go global, but because we believe it's key when you have a powerful idea and a disruptive innovation, then your potential market can be the world. And how can you go global? And three, in that perspective, because we focus more on growth equity than on venture companies, we do a lot of, we help them a lot to do acquisitions. To give you an example, we made 135 investments since 2002, and we have achieved more than 342 acquisitions for those, which means that in average we do 3-4 acquisitions per portfolio companies. And those are the ways that we try to help them to grow. And then the last point is we try to develop what we call the connecting the dots program, which goes from the G20 YEA to the, that has been fertilizing a lot the way they could optimize the growth. That's what we do at Nextstage.
Thank you very much. That's really interesting to know. So now we are coming to the end of this beautiful discussion. So for closing, I would like to ask to each of you in one word, what is your investment strategy for upcoming years? Lo, for example, do you have this magical word?
Make money.
Good. These are two words and that's perfect. Ahmed, what would you say?
Bullish. And to Aneel's point of the 4-minute mile, we're lucky enough to have been backers of Careem. So people were wondering, is it possible to create a unicorn, $1 billion company out of MENA? Careem proved it's not only possible to create a unicorn, they created the $3 billion company. And we're already seeing the Careem mafia starting companies, high-profile companies like Swivel, Maktub, and Halan, and Sari. So I would go with bullish.
Perfect. Thank you very much. Aneel?
Let's see. I really like make money. I'm gonna try to be different. I'll say help founders. I feel like that's the bread and butter. If I can, you know, I'm 6 years in. I'm just getting started. If I can be known as being helpful to founders, like everything will kind of stem from there. Good stuff will happen.
Yeah, that's perfect. Supportive. Grégoire?
Build global champions, and because that's the best way to create value. And we try to focus on that around not only digital, but smart healthcare and as well as environmental innovation, because I think that they would be the two other drivers.
Perfect. Thank you very much for all of you, Grégoire, Aneel, Lo, and Ahmed. That was wonderful having you. Thank you again. Stay safe, everyone out there, and thank you for listening to us.
Thanks for having me.
Thank you.
Thanks, everyone.